Good morning, this is Mayor Walensky with Driving Markets, driving while talking about markets. Okay, let's kick off. So China's shadow bank, Zhongyi, has actually filed for bankruptcy in China. Now this bank, why is it so important, is because it's an entrepreneurial bank and China itself is contracting. The overall economy is contracting and falling. Its manufacturing output, its manufacturing production, its sales, retail sales, all sectors are falling, and that contraction is going to impact the West because China is the number 2 biggest economy globally, and when China will fail, that will cause the US and the Western world obviously to have a reduction in their overall economic and global growth. In addition to that, China is trying to venture and export its industrial might and its wisdom and experience overseas into Africa, into other parts of Asia, into Europe and into the Middle East. So it's trying to compensate for its slower local production by exporting its wealth of knowledge and cheap labor overseas. So China is one to watch. Meanwhile, on financial markets, you're going to have a continuing trending down overall of financial markets due to rising US yields and a complete overbought, overstretched valuations across the board on the US Dow, the Nasdaq, S&P and European markets. The DAX is well overbought. So what you're going to see is over the next quarter, you're probably going to see a 10 to 15% drop. Not a crash, but 10 to 15% drop. If yields move up to 4.40, which I believe they will on the US 10-year Treasury, then that is going to force further, or put pressure further on US markets downwards, southwards, as far as returns are concerned. Looking overall in the geopolitical, the US coalition, which is a naval coalition, which is not really a naval coalition, it's made up of the US Navy, a destroyer from the UK and a destroyer from France. They are looking to bomb the Houthis in Yemen because of the disruption to shipping that they're causing, where there's a drop in over 20% of freight and shipping in the Red Sea through the Gulf of Aden, which is the Bab el-Mandeb waterway, and that is going to cause a problem. It's going to further add to inflation, which will come through in February, March. There's 6,000 barrels a day of oil pass through the Red Sea and the Bab el-Mandeb waterway. That will have to be diverted or stopped completely. That will push oil up, obviously have a further impact on inflation. You can expect inflation in 2024 to tick up, and not only that, the further disruptions in the Red Sea will cause a stoppage or a shortage as far as supply chain is concerned, and that is going to also put further upward pressure on prices. On Friday, the non-farm payrolls came in higher than expected. Wage inflation, as I stated previously, came in higher than expected. So you're probably going to have rising wage inflation in the US, UK and Europe in 2024. That will scupper any chances of significant rate cuts as far as the European, UK and US are concerned, and that will put more pressure on the homeowner, the businesses and the overall economic cycle. So that as we're coming to the end of the economic growth cycle, we're definitely going to go into a slowing period in 2024. The question is, how hard a recession is it going to be? Recession, there will be. The question is how hard a recession is going to be in light of the fact that the US is going to have elections, and the Biden administration and his cronies will no doubt do everything possible to maintain the stock markets at super high levels and fake the public and fool the public into believing that everything is absolutely hunky-dory. That's it for now. This is Mayor Walensky with Driving Markets. If you can share, subscribe, comment. If you have any input whatsoever, more than happy to hear from you. Have a great day.